Hello everyone. Today we are going to discuss another penny stock priced at 20 rupees is Vishal Fabrics Limited. If we look about the brief introduction, so the company is engaged in the business of manufacturing and selling of textile products like dye, yarn or denim products. If we look at the clientele of the company, so the company has a clientele of Lee, Zara, Emporio, Armani, Calvin Klein, Being Human, Tommy Hilfiger like brands, which shows that the quality which the company is having, and obviously, company is having a production capacity of around 900 lakh meter per annum. Uh, Also, the company has installed a rooftop solar Indoli unit of nearly 1 megawatt, which requires a huge amount of investment, for which the company has taken a loan of 198 crores, of which prepayment has been of around 71 crores has been already made by the company. If we look about the other factors like the market cap, so the company market cap is stood at 413 crores, which shows that the company is a penny small cap stock company. Looking to the stock PE, so stock PE is around 16.4, but the industry PE is median PE is around 23.82. So it shows that the PE of company is less than the median PE or the peers PE. So that shows that the company is undervalued, and there is a potential to increment of the share pricing in the near future. If you look at the ROC, so ROC is around 14% and ROE is around 14%, which is a good number if we compare with the penny stock like this. Uh, so, uh, if we look at the other balance sheet or the financial statements, so looking to the financial statement, so the company is having a sales of 1415 crores, annual revenue run rate of 1415 crores, 14 crores, but that is a dip of a few percent in the sales turnover, and that can be due to seasonal or where yes, that is not in concern right now because the dip is not significant or substantial. But the thing which we have to discuss is that the profitability has reduced to less than to 50% because of the dip in the operating profit margin, that is from 10% to 7%. In March 22, it is 10%, then 9%, then 10%. So because of reduction in the operating profit margin, the net profit is also dipped. So if we look at the compounded sales growth, it is around in 10 years time, the company has given consistent sales growth return and profitability as well. If we look at the other factors like the equity share capital, so first we look the corporate action that the company has already done a bonus issue of 1 is to 2. That is the reason why the equity share capital has increased from 33 to 99 crore rupees. If we look at the reserves, the reserve is 299 crores, which is a decent result, three times of the equity capital. If we look at the borrowings, so the company has consistently reducing their borrowings from 387 to 378 to 317 to 314, which shows a good signal, and company is deleveraging themselves. On the other hand, if we look at the other liabilities, so the liabilities stand at around 150 to 160 crores, which shows that obviously the debt is required for the financing their working capital. So company is obviously in manufacturing. So major of the total assets comprises of fixed assets, which stood at 232 crores in September 23. Looking to the inventory, so company is having inventory of around 100 crore rupees, which shows that the working capital is usually this business requires a huge amount of working capital, and that is if you can see the combination of trade receivables and inventory, so it is more than 550 more than 550 crores. So that shows that if we look at the 550 crores of trade receivables and the other trade payables of 100 crores, so around 450 crores of working capital is used by being used by the company, and that is the reason why the company is having a good amount of money that is being blocked in the inventories. However, the clientele of company is such that they requires that time they requires a time of like say 90 days credit period or 120 days credit period, and the company is not in this situation. Company is not having that power because the buyers are having the power more than buyers are dominant players, so they are having the more power than the companies itself, and that is the reason why the majority of the funds is being blocked. And also, if we look at the turnover of companies, or companies having turnover of more than 1000 crores, so this amount of working capital is inevitable to be blocked. So if you look at the operating activity, the positive factor is the company is consistently increasing its cash profit, and the company has a cash profit of around 74 crore rupees. So that would be a good tick yes mark for the company, that the company is not showing any fictitious balance sheet or financial statement, but the company is having a decent background of that, and the company is consistently receiving recurring cash flows for the company. On the other hand, if we look at the financing activity, as we have discussed, that the company has repaid their borrowings to around 101 crore rupees and interest of 37 crore rupees. So obviously, if a company is having 74 crores of cash flow from operating activity, so I think that they are sound enough to pay off their 37 crores of interest and 101 crores of borrowing. So that would be a good factor that to be noticed, that the company is having a good decent background, and it is deleveraging consistently and becoming more focused on equity and their equity shareholders. So if we look at the promoters holding, the promoter are having around 69% of shareholding. Now looking to the FII, so FII are having 3.66% of holding. If we look at the other in public, so in public also nearly 8% of share is being held by strategic investors. So more than 80% are being held by strategic investors, and less than 20% is being held by the public or retail investors. So that is a big yes for the company, and that is a very advantageous factor or edge to a that gives an edge to a company, that if a company is having less than 20% being held by the public investors or retail investors, so it shows that a small or a penny stock company which is having very less participation from retail investors, or so obviously that would give an indication that the penny stock is being sound or decent enough, and it is always back. It shows that the backing which is being received by a company from its long-term investors like promoter and FIIs. And I think this is a conclusion from my side. I think the way the company in recently 5 or 6 days, I have consistently giving insights about textile industry, because textile government has given a push to the textile industry. So I think that stocks in textile industry are highly undervalued, and they need to be they need some movement. And in next, if I think that in next 6 or 12 months of time, or next 2 or 5 years of time, the textile sector will definitely give a great and humongous return. So this is from my side. I hope that you all enjoy this video, and this is not a video. This is an educational content, not for the purpose of not to be considered as financial advice. Neither I am giving any portfolio services relating to shares purchase and sale. So please consult your financial advisor before investing into stock markets. I hope you all enjoy this video. Thanks for watching.